Each one, I have given each one. Okay. Theory question. Counting concepts and conventions. The very first module. That's about concepts and conventions, right? Concepts and conventions. Either maybe just a concept, or maybe just a convention, or maybe both together. If it is together, there are so many. Ask me. You have to ask me only. She's asking that girl, what is this concept? You have to ask me now, sir. Stop it. Simply you are telling some questions, but I don't know the answer. Huh? What is that? Concepts and convention. Business entity concept, money measurement concept, dual aspect concept, cost concept, periodicity concept.
Accrual concept, sir.
Which one? Which concept? Yes, sir.
Accrual.
Online.
Accrual.
Yes, accrual concept. Already told no. Already told. Which one? No, it's already there in your PPT. Yes, already there. Already told no. Dual aspect concept. Already told. Okay, there are so many concepts like this. That's called concept. You try to one meaning. Concepts of accounting refer to those basic principles upon which or according to which the entire accounting theory or accounting domain itself is evolved. The framework, accounting framework, we are calling it as accounting concept and convention framework. It gives the framework, the broader guidelines. Convention means convention of materiality, convention of conservatism, consistency, and one more is there. Totally 4 conventions are there. Which one? Conservatism, materiality, okay, prudence, like that there are 5. You please read that. Okay, you have to write 1 paragraph about it if it is asked in 10 mark. If both are asked, write 2. List out all and explain 3 plus 2 or 2 plus 2. Okay, you can decide, right? Depending upon the length of the question and answer and the mark also. The next one, there is a concept called IFRS, International Financial Reporting Standards. Meaning and importance may be important one. Meaning and importance. IFRS, International Financial Reporting Standards. Importance, need, significance. Why do we need this? What is IFRS? Why do we need that? Okay. 10 marker means you have to explain at least 4 points and 1 paragraph of meaning of that. What is IFRS? Yeah, you have to explain. 10 marker means you have to explain. How much more you are writing, that much more you are having a chance of getting mark. Getting more mark. Okay. All right. So next, if you come to the second module. Sorry. Yeah. That's what I'm telling. Yeah, not 2, only 1. That is either or. Either IFRS may come or, yeah, if I say any one, that is a question paper. Next, second module. Yeah, one preparation of trial balance. What is trial balance? Okay, then we have a chance of like this. Asking only theory. What is trial balance? Why do we prepare trial balance? That could be one question. Otherwise, what is trial balance? And prepare a trial balance. I may give you some data. You have to prepare a trial balance, or you yourself have to hypothetically take some values and prepare one trial balance. Small trial balance. Okay. What is trial balance? Need for preparation of trial balance. That can be together. Otherwise, just what is trial balance, or even without what is trial balance, I may ask you to prepare one trial balance by giving some ledger balances. Or even ledger balances, I may not give you. I will ask you to prepare a hypothetical trial balance of a manufacturing company. Means There should be a work in progress. There should be a raw material. There should be a finished goods. If I say prepare a trial balance of a trading company, then you should not write about anything on work in progress, raw material, finished goods. Trading company will have only stock in trade. Trading companies, buying and selling, that's all. So you have to see that also. Okay, preparation of trial balance is accounting point. For what business you are preparing? Some logic, right? If it is 10 marker, at least some minimum 10 items should be there. If it is only trial balance. If I asked you meaning of trial balance, I can allot 2 marks for that. Remaining for trial balance 8. Or if you think you know more, then you can write at least 60, I mean maximum 16. 16 into half 8. Here it is 2 marks, 10 marks. Is that clear? Trial balance. Concept from trial balance. Then ratio analysis. See, of course, your content in the syllabus is very limited. So whatever you study, that will come in the exam. Simple logic. Only 5 modules are there. Question paper is very lengthy. 100 mark you are going to write, but we are giving you choice also. In section A, 2 questions are extra. Section B, 1 question is extra. So 10 plus 10, 20 mark. I have to prepare a question paper for 120 mark with that 5 units. So whatever you see, whatever you read, whatever you prepare, that will be there definitely in the exam. That's simple logic. Okay, but to give you more confidence, we are writing this. What is that? Ratio analysis. 2 chances. One is just asking you what do you mean by ratio analysis. Okay, what are the different types of ratios available for analyzing the financial position of a company? That could be one possibility. Otherwise, what I can give you? I can give you some data. I may ask you to perform the ratio analysis. Just like your second assignment. Calculating ratios for the given data. If you know the theory, you can do the same application also. If it is application problem. Okay. If it is asked to explain the ratio analysis without giving you any number, theoretical question is there, means you take some number to get more mark or to get the attention of the evaluator. What you do? You classify the ratios into 4 categories: solvency ratios, profitability ratios, turnover or activity ratios, and then liquidity ratios. You give 4 category. Under that, you have some classification. You write as a list or a chart. Writing examination is an art actually. Whatever you know may be different. Okay, but what you are producing there is important. So you give a chart. If it is ratio analysis asked, write 1 sentence. I like all the 10 marker introduction. That gives some kind of impression to the evaluator to give you more mark. Introduction. Connect that to the question. Write the question. Write the title. Don't produce any movie without a title. It is very difficult to market. So write 1 title. Suppose I am asking you, what do you understand by trial balance? Why do accountants prepare trial balance? If it's a question, 10 marker. Write the heading first. Meaning and importance of trial balance. So that the evaluator need not to search for the question paper somewhere. He himself understands what is the question and what is the answer. He will give you mark, that's all over. But if you are not writing anything, he has to search for the question paper here and there. But your university is giving some comfort for us. Side by side question paper is there for us. But that also you have to minimize one window and open another window. Teacher is the laziest personality in this world. So minimizing this window and opening another window makes some 2 seconds or 3 seconds. But it is little difficult for us to minimize this and open again. Okay, so what I'm telling you is write 1 title for all your questions, even 5 marker. If it is 10 marker, start with introduction. Then meaning of trial balance or definition of trial balance or both. Then importance of trial balance. Give some 5 points, bullet point. Then you explain about that 4 points. If it is this, if answer is almost okay, then we can give you maximum mark. But what you are doing is, because you lost writing exam long back. So what you are doing is, you write some number 4A. that I cannot even look at in lens. 4A. You will write something. 4 lines, 5 lines over. That's all. Your paper is coming to us in a scanned format. It's not going to be in the same manual copy what you are giving. Here itself I cannot read. Computer is reading and it is reproducing to us. Then how worst that will be there. Of course, we are applying some advanced, updated version only, but it may not be that much readable for us. So what I'm telling you is give the question number properly in the margin. Give a heading. Write this. 10-mark question. If it is there, if you're writing, at least you should run for at least 3 pages for getting you 9 mark or 8 mark. But what you are doing is you are writing only 1 paragraph. It's difficult when we are evaluating a paper. 1 paragraph you will write. 1 paragraph for 10 mark, not even 10 sentences. So it is very difficult. Please practice writing. You have 3 hours time. 3 hours time. In 3 hours, you can make some 50 pages. Yes, you are writing whatever you want, no? If you write whatever we want, you will write less. But you are writing whatever you want or whatever you know. Then you can write more than 50 also, but you are not writing that. That's the problem. Please write relevant answer for a maximum possible extent. Okay. 2 pages, 3 pages, write it. Next, another question. Trial balance is over. And then ratio analysis, we are talking about ratio analysis. Either theory or numericals. Okay. Either theory or numericals. Next. Cash flow statement. Cash flow statement. Similar. Either theory or some preparation of cash flow statement with limited amount of data, with less number of items. Okay. Or I can ask you in theory, I can ask you list out 5 each on financing activity as well as investment activity or operating activity, whatever it is, for a cash flow statement. We already discussed another class, no? What do you mean by cash flow statement? Or I can ask you, what do you mean by operating activity? Or what do you mean by financing activity? Or what is investment activity? List out 5 items under each activities. List out means just write bullet point. That's all. No need of explaining. For which one? We'll make now. No, I'm not telling now inflow 5, outflow 5. 5 activities of financing. That could be inflow as well as outflow. That's all. Okay. Next. I may be giving you one balance sheet, or you may be asked to prepare a cash flow statement itself, either theory or practical. Next chapter is, cost sheet. What you're going to do now, cost sheet. Preparation of cost sheet. Preparation of cost sheet. Preparation of cost sheet. Preparation of cost sheet. Okay, preparation of cost sheet. Another one is break-even analysis. Either that or this. Break-even analysis. I'll tell you what it is. Break-even, preparation of cost sheet, or break-even analysis. Either that question or this question. How many are there? 4 are there? Both. Either theory or problem. Okay, most probably problem. How do you calculate break-even point? What is break-even point? That's what the subject matter of now today. What is break-even point? You may be knowing it, no? Yeah, the point from beyond which, the point crossing which the company starts earning profit. That point is called as break-even point. Very good. So that is a subject now. I'll come to that after 2-3 minutes after completing this list. Okay. Now, how many over? 4 or 5? Section B 4 only over. Huh? 4 only over. IFRS, concept, ratio, trial balance. Yeah, over now, 5 over now. Yeah, 6 are over, yes. I already told the disclaimer already. All right. So next, section A. There will be 5 questions. You have to answer for 3. Again, same logic. Each unit will have 1 question. Okay. For example, objectives of accounting, objectives of financial accounting, 5 marker. Okay. For that also, you try to title that you write objective. If anything is about point, please write a point by point. Don't write a paragraph. If you write a paragraph, you will definitely get less mark, even though the answer is 100% correct. I am the only person going to correct your paper. Maybe one more teacher for second evaluation, maybe correcting. But in general, point is there means it is easy for us to understand whether you understood or not. How are you presenting that point? So suppose objectives of financial accounting, first question I'm telling you. In that, please write 1 line of meaning of accounting. Financial accounting refers to the process of identifying the financial transaction, recording them in the proper books of account based on some accounting rules and regulations in order to find out the profit or loss as well as the financial position of the business. 2 marks already guaranteed. Now, further 3 marks. The following are the objectives of financial accounting. Point number 1, 2, 3. No need of explaining. Point number 1, to find out the financial performance. To inform the needy people about the financial position as well as the financial performance of the company. The objective. If you write like this, you will get what happened. He already illusionizing that mark he is getting. Okay. Second question. If IFRS is not coming in 10 marks, it may be there in the 5 mark. Instead of this objectives of accounting. Okay. Similarly, if the convention is there in the 10 marker, concept 1 or 2 may be asked in the 5 marker. So if you okay with concept and convention in thorough, you can write for both 10 marker as well as 5 marker. Okay. Then second one possibility is, sorry. Oh, yeah, that's over now. Next question for 5 marker. Okay. In first unit, this one, second module. Second module is about preparation of financial statement, right? Yeah, so maybe some items of profit and loss account and balance sheet, or I may be asking you to draw the format of balance sheet or format of profit and loss account, or I may be giving you some items and I ask you, how do you treat these items in the financial statement? Say, for example, closing stock, depreciation, outstanding expenses, maybe 4 items I may give you, and I may be asking you, how do you treat those adjustments while preparing the financial statement of a company? Say, for example, accrued income need to be added with the concerned income in the P&L account and to be shown as the asset side current asset in the balance sheet. Depreciation, you have to minus from the concerned asset in the balance sheet and you have to show as an expenditure in the P&L account. Like that, there are so many items are there, just 5, important 5. Any 1 or 2. Okay. So this is second chance, either adjustments or format. Okay. Next one, that is third module, no? Ratio analysis. In this, I may be asking you to calculate any 1 or 2 small ratios by giving you some data. Say, for example, current ratio. Calculate current ratio from the following data, or calculate equity ratio from the following data. Any 1 or 2 ratios, 2 ratios maximum. Simple ratio, simple calculation. Calculate net profit ratio, or calculate any ratios. Yeah, formula also will be to be mentioned. To be mentioned. By whom? If it is not there, by you. If it is there, also by you. in the answer sheet. Your calculator is allowed for you. That is not our purview, you ask them. Okay, whether you are allowed or your proxy is allowed or calculator is allowed, that is beyond our control, beyond my control. Of course, calculator is required, otherwise we cannot calculate it. Yeah, minimum small, normal, simple calculator is encouraged to bring and apply. Yes, sir. Something you're asking? Next, ratio analysis, then cash flow statement, 5 marker. In cash flow statement, 5 marker, just I can ask you, what is the need for or difference between cash flow statement and the fund flow is not our syllabus, no? We can ask cash book. Difference between cash flow statement and cash book. You remember we studied the subsidiary books, no? Subsidiary books. So that is also an important question, actually. What are the various subsidiary books? Subsidiary books. Sales book, sales return book, purchase return book, cash book, bills receivable book, bills payable book, general proper. These many subsidiary books are there. I may ask you list out all the subsidiary books and explain only one for 5 marker. Okay. Ratio over, cash flow over, first chapter over. An important question. It is not. You can have a choice. This is entire important question. You can just take one random number generation in Excel sheet and you can give the number for these all topics. Which number comes, you prepare only that. If you prepare everything, passing is 100%. Even though you do not know fully all these things. Okay. Possibility is more. But if you prepare only selective, you have to prepare more in that. Otherwise, if you not doing correctly, then you are having a less chance. Okay. Yes, sir. Less chance of passing. Passing. It's not a final exam. It's only just an exam. That's it. No. Definitely, you write it. Planning means what? Suppose in your first assignment you are getting 24. Second assignment you are getting 23. What is your plan now? Tell me. Like that. Instead of writing this exam. Name. That one I have to correct it. Thank you for reminding that. So, if you are getting 40 put together in 2 assignments, getting more mark is not required in the final exam. Is it 50 or 40? 40 only to pass. So 20 plus 20 means you already passed. So we'll take care of that. We'll take care of that means what? We'll give you 40. That way I'm telling you. Nothing. You are thinking something else. Okay, we'll complete this. Ratio over, subsidiary books over. Subsidiary books very important. Okay, subsidiary books. Next. Cost sheet. In cost sheet, 10 mark it is there actually. Okay, so in 5 marker, break even point. Calculation of break even point. Calculation of break even point. How many questions are there now? 5 are there? Right, we'll start with break even point. Okay, so please don't ask me any more questions of question paper. Question paper is with you now, right now. Okay, you can prepare accordingly. Already there. From the syllabus copy, this question paper is prepared. Okay, right, listen all of you. Break even point we can start in cost accounting, then you can go for cost sheet. Normally cost accounting is nothing but a branch of accounting that consists of tools and techniques or methods and some kind of methodology which help us to ascertain the cost of a product or service and also to have a control over the cost of a product or service. I hope you're understanding. It's a branch of accounting that has some rules and regulations or that has some kind of methods, techniques and tools which are helping us in order to ascertain the cost of a product or a service, and also to have control over the cost of product or service. Two objectives of cost accounting. I'm telling you now. What are the two objectives? To have control over the cost of goods and services, and also to ascertain. Basic objective is to ascertain. What do you mean by ascertain the cost of a product or service? Estimate. Finding it out. Okay. Suppose you are a manufacturer of some furniture. Some client is coming and asking you, sir, I want this kind of furniture in this number, in this quality. What is the price? We cannot make him to wait for another 1 month or 1 week. Sir, wait, I'll manufacture, I'll make it, and I'll come to the cost, I'll tell you. Then by the time we'll go to another competitor of yours, he will buy the product. And okay, that's very much not required. Okay, what you do? You have to give a quotation. All of us are going to a shop or any, suppose you are having a piece of land, you are approaching a contractor, a builder. Okay, you are telling your specifications. That's a 1,200 square feet piece of land. I want duplex house. Okay, 900 square feet built up in the floor area as well as the first floor. Okay, 1,800 square feet built up area. These are the quality I want. Bricks to be used, cement is to be used. All these things you are giving. He is telling, sir, wait for 1 hour or 2 hours, or come tomorrow, I'll give you the quotation. Or immediately somebody will be immediately quotation. They already programmed it in Excel. They'll just give you a quotation. You are seeing that final price, cost. That this is costing 80 lakh rupees. In 6 months, we'll hand it over. Like that, he is giving you the statement, right? That statement is called as cost sheet. That statement, estimated cost sheet. Okay, so that is used for what? To have a estimation of cost. While doing also is preparing the same thing. While doing the work also, he will prepare that cost sheet. It is actual cost sheet. How much he was estimating and how much is reality. Any deviation, much deviation is there, then he will be thinking about what is the reason. That is called control over the cost. So this is the basic objective of cost accounting. So cost accounting is a branch of accounting that talks about how to ascertain the cost of a product or service, and also how to exercise control over the cost of a product or service. Okay, controlling is very important. In the market, if you are quoting higher price, you are having a chance of losing your customer. At the same time, you are quoting a lesser price, you are having a chance of getting less profit. Both are not intended. You should be estimating exact price of a product or a service. For that, cost accounting is required. Okay, we'll come to this once again after the break-even point is done. How to prepare a cost sheet, I'll tell you. Okay, break-even point. There are so many techniques available. I told you, methods and techniques. Costing methods, there are so many methods available for us to find out the cost, to arrive at the cost, to ascertain the cost. Depending upon the industry in which your company is operating, will select the costing method to be applied in your company to find out the cost. Say, for example, process costing is one of the methods of costing. Which industry will apply this? Any company which is manufacturing some product that is going through so many processes. Best example, textile industry will have to apply process costing method to find out their cost of product. The output of first process will be the input of the very next process. Okay, cotton, then spinning, ginning, yarning, then going to final product, dyeing, then bleaching, then final textile suit is coming out. So process. Oil refineries, they may also have the processing. Any industry, any company whose product is coming out of several process, consecutive process, those industries will apply process costing method as their costing methods to ascertain the cost. Okay, operating costing is there, operation costing is there, service costing is there, hotel costing, hospital costing, hostel costing. There are so many. These are all service industries. Service industries. They have their own costing method to ascertain the cost of a meal or cost of a room. Okay, there are cost units available. If you are going to a lorry owner and asking, sir, I want to transport this much ton from Mysore to Bangalore, how much you are going to charge? He will say per kilometer, per ton, is the price. Per ton is called as cost unit. Now we are giving you some service. University is giving you some service. They want to calculate means cost per student. The student is the unit of cost here. Suppose you are going to a hotel, bed per person, okay, per day, something like that, okay, kilometer, or if you are going for a product, okay, sugar per ton or per kg, bricks number per one for one bricks, how much the cost? Cement industry per bag or per ton. This ton, bag, kg, square feet, liter, these are all called as cost unit. The company is expressing in terms of that to the customer. Okay, cost unit. Another one is cost center. Cost center means the place or a person or any other thing to which the cost is getting accumulated. Now, executive MBA is one of the cost centers in Dayana Sir University. To run EMBA, what is the cost incurred by the college? To run BCom, what is the cost? So BCom is one cost center, BBA is one cost center, EMBA is another cost center, normal MBA is another cost center. On engineering program, that may be another cost center. Likewise, in companies, cost centers will be there. Okay, production department is one cost center, and within the production department itself, there will be so many cost centers. Okay, so this is called basic concept in cost accounting. Now come back to the techniques before going to break even point. Techniques means I told you those tools and techniques used for controlling the cost of product or service. Controlling means not reducing the cost. Reduction is different from controlling. Controlling means reasonable costs should be incurred for production purpose. There should not be any unnecessary cost incurred in the business process. Unnecessary cost should be avoided. Simple example, you are ordering so much of raw material than that of your requirement. You are telling that, sir, is available cheaper price today. I'll just purchase and keep it. What's the other side of it? Storage cost is important. You just bought it because of 50 paisa is less per kg. You bought 1 lakh kg. Now you have to store it in a storehouse. Stores you have to keep it. It may perish if it is a perishable commodity, or it will lose its features over a period of time. If that is the nature of product, evaporation. If it is petrol, oil kind of thing, evaporation is possible. So you have to preserve it very carefully. For preserving, you have to spend money. So you have to find out the preservation cost is lesser than the advantage what you are getting from the price reduction. Then you can go for it. Otherwise, you should not go for it. So there are so many points you have to remember when you are controlling your cost. For that, we have some techniques. The important technique is standard costing, variance analysis, marginal costing, and there are so many. We are not going to discuss all those things, just have an understanding. Methods means process costing, operation costing, unit costing, output costing. There are so many. What are these? These are helpful for finding out the cost of a product or service. Depending upon the industry in which you belong to, you have to apply appropriate method. Not all the methods applicable for all the business organization. Based on the product what you are doing, you have to select the appropriate method. Suppose the outputs are identical in nature. Outputs are identical. Suppose this product is prepared, manufactured, remote control is manufactured, or mobile is manufactured, or the same kind of this kind of chair is manufactured. There is no difference between chair 1 and chair 2. Identical in nature. All are identical in nature. It is produced only for stock, not for order. Specification is not taken into consideration. The company already, the industry already went to the market, took a survey, understood the taste of the customer, they prepare accordingly. After deciding they don't go to the customer, madam, you want the chair should be moving this side or left side. Nothing. Only you are producing whatever you understood already. You are keeping it for stock. If you like it, take it and go. That's all over. If these kind of industries are there, you have to follow a system called unit costing system. Total cost of production divided by number of units produced is equal to 1 unit cost. That's all. But you cannot do this same thing in an industry where that industry is mostly doing the product for customization. There is no standard output, customized output. Yeah, you just take an example of construction. Same 30-40 piece of land, you may want duplex house. I may want only simplex, only one floor. That's it enough. You may be demanding to construct by applying bricks. I want only the solid block is okay. So there are description differing. Tailor shop, ready-made industry can apply unit costing. Ready-made 40 size men's shirt, full hand shirt. That's all. Same, identical in nature. Another one, tailor. You are going to a particular person and telling that, sir, this is a 2-meter cloth. In this, I want a shirt to be stitched for me. Measurement may be different from one customer to another customer. Style may be different. Okay, the material to be used to tailoring to stitch it may be different. Pocket, some person may want only one, some person may be want two, or some person may not be want any pocket. There are so many things. Specifications are there. If specification is there, you cannot apply the costing. Okay, so based on this, we have system. I mean, we have cost methods, cost techniques. Techniques means controlling. Methods means finding out the cost. Okay, come back now. Break-even point. Break-even point is coming under marginal costing. Marginal costing is one of the techniques of cost control or cost management. Okay, the point what I was trying to tell you is cost control is not a point of cost reduction, just reduction, but cost control will result in cost reduction. But cost control is not the tool for cost reduction. Why we have a cost control? To give the product to the customer to the, I mean, in the reasonable price. At the same time, we should not get any kind of loss. We should be arriving at correct cost. Okay, wastage should be avoided. Storage should be kept carefully. Many points are there. We are not studying any cost accounting here. Only a part of it. So we can come to now marginal costing. Marginal costing is nothing but a costing method which talks about the incremental cost in the total production cost because of adding one more unit of production. Suppose you already produce 1,000 units. Total cost of producing 1,000 unit is 10,000. Now you are going to produce one more unit. How many units you are producing so far? 1,000. Costing rupees 10,000. So what is the cost per unit? Huh? How much? 10 per unit. Now you are going to produce one more additional unit. 1,001 unit you are going to produce. How much will be your total cost? How much will be? 10,010, mathematically correct. Mathematic proportion. In mathematics, proportion. 1 is equal to 10 means 1,000 and 1 is equal to 1,010. I mean 10,010. Right? Mathematically it is okay. But in reality, it is not correct. Why? You are trying to say something? Price breaks. What is that? Okay. Okay. But that is for customer, no? But our production, how we are able to give lesser than the price what you are quoting for others because of this fellow is asking more product. What is the reason? Okay. Okay, suppose we are charging 10,000 rupees for you, 10,000 rupees for all of you. There are some seats are empty. If one more person is coming, we need not to charge him the same 10,000 rupees. We can ask him to give only 5,000 or 6,000. Why? What is the reason? College is not going to get one more teacher for him. Same teacher is talking. The same voice you can also hear from. Okay. Same projector is there. He also can see the same projector. Nothing, no facility, no need of adding any more facility newly for that particular customer. Same concept in a different terminology. I'm going to tell you now. The terminology is entire cost can be classified into 3 categories. Cost of production or cost can be classified into 3 categories. What are they? Okay. Okay. Profit or the cost. This is the style of writing. You write something. If you don't get anything, you write in something. Irrelevant one. Okay, no problem. The other possibility, yes, sir? Factory cost, administration cost, selling and distribution cost. Okay. Anything else? He is classifying the cost based on the place where it is occurring. Sir, if it is relating to manufacturing, factory cost. If it is relating to managing the business, admin cost. If it is relating to marketing the product, delivering the product, distributing the product, marketing cost or S&D cost, selling and distribution cost. Sorry, what is direct cost? What is direct cost? What is your name? Tell me. Sorry, 1984. Direct. What is direct cost? Meaning. Simple. You derive from there only. No. Any cost that can be directly related to the product or service, the output, called as direct cost. Example, to manufacture one particular output, say for example, this notebook. Okay, this notebook you are manufacturing. Okay, this notebook, if it is containing 100 pages, 100 sheets are there. 100 sheet is equal to 10 rupees. You are buying 100 sheets. That's what is telling raw material. Okay, raw material is paper. 100 sheets are there. How much it is costing? 10 rupees. Assuming 10 rupees. Okay, this 10 rupees is the direct cost. That's why he's telling raw material cost is a example for direct cost. Now, to manufacture one notebook, what's the cost of the paper? To manufacture two notebooks? To manufacture 4 notebooks? Proportionately, directly, it is increasing. Direct proportion. Okay, without that cost, you cannot make the notebook. Okay, this one, wrapper. The cost of the wrapper is indirect cost. Why it is indirect cost? Without this also, I can make a notebook. Instead of this, I can buy another wrapper. But without a paper, you can never make a notebook of a paper. Okay, this is indirect cost. The stapler pin, indirect cost. Indirect cost is common terminology. It's indirect material. Again, indirect cost can be of 3. Okay, material, labor, and expense. Basically, you are classifying the cost into 2. Okay, labor, direct cost, indirect cost. But before that, cost can be of 3 categories. One is material, labor, and expenses. Paper is a material. Cutting and pasting and in a size of this 100 page. Somebody is doing, no, that's called labor. Then cost in this wrapper, if you want to print something, some college will ask, sir, print Dayananda Sagar University, EMBA, like that you have to print and give me the wrapper. That you are giving to some of the printing press and you are just getting the wrapper printed. That's called cost. Cost, expense cost, expense. Don't confuse the term expense and cost together here. Colloquially, you may say expense, cost, and both are same. But cost accounting, both are different. Cost is a broader term, expense a minute term. Expense means anything you are spending to make something, outsourcing. In this case, outsourcing, you are outsourcing, you are not having a printing press. Or even if you have a printing press, you will take from there and you charge some cost for that. Even though it is yours, you have to charge. Otherwise, you are underestimating the cost. Machine hour rate. Okay, so you have this different cost. Now, direct cost, indirect cost. Direct material, direct labor, direct expenses. Similarly, indirect labor, indirect expenses, indirect material. Stapler pin, wrapper, yarn, thread, or something, or some kind of paste, or something you are using for that. All those things are called as indirect material. Without a stapler pin, can't you make a notebook? You should say yes, you can. You cannot, yes. Yeah. Without stapler also, you can make a notebook by stitching it. Alternation is there. Yeah, that's why it's called indirect. In one stitching machine, how many notebooks you are stitching? in one stitching machine, you can stitch 1,000, 1 lakh, 2 lakh also. That is why that is called indirect. But with 100 page of paper, you can make only one notebook which is comprising of 100 pages. If it is 50-page note, you can make two. And again, it comes only less, 50%. Yes, primary ingredient you can say, or without that you cannot do that product at all. Without that you cannot make that product at all. It's called as direct material. Direct material. Okay. So direct and indirect. All indirect is called as overheads in accounting. All indirect material, indirect expenses, and indirect labor. All these put together we call it as only one word, that is called overheads. What is called why it is called overheads? Only 3 heads are available already: labor, direct expenses, direct material. Apart from this, it's coming above and more than this. We are supposed to incur something. That is why it's called overheads. All indirect cost is called as overheads. If that overhead is taking place in office, it's called office overheads. Payment of salary to the office manager is an example for office overheads. Office is an office overheads. Okay, any expenditure or any labor or any material that is used in office and of indirect nature is called as office and admin overheads. If that kind of cost is there in the delivering of goods, marketing of goods, distribution of goods, then it is called selling and distribution overheads. Example, can you say? Example for selling and distribution overheads. That's too much broad, no? Yeah. Delivery van expenses. Delivery van expenses. Right? Store, warehouse charges. Insurance for on finished product. Insurance. Handling charge, handling of finished good charges. Okay. Security for warehouse. Packing charges. Then warehouse electricity. Warehouse insurance. All these things. Warehouse manager salary. Which depreciation? Depreciation is indirect cost. Depending upon where it is occurring, that overhead. That's all. Suppose machine is there, we're using it for manufacturing. Depreciation of machinery is there. It's an example for indirect cost in factory. So it is called as factory overhead. Depreciation of office furniture is an example for office and admin overheads. Depreciation of delivery van is an example for selling and distribution overheads. Clear now? So what you do is, if you add these 3 things, direct expenses, direct material, direct labor, these 3 things are added together, we call them as prime cost. We call them as prime cost. Prime cost is nothing but aggregate of all direct cost. Aggregate of all direct cost. What are those aggregates are there? Look at this. Look at this. Material cost, labor cost, expenses cost. These 3 things put together, we call it as direct cost, prime cost. Okay, see, look at this. This again divided into 2: direct material, indirect material, direct expense, indirect material expense, direct labor, indirect labor. Look at this. This is indirect, this is indirect, this is indirect. All indirect put together is called as overheads. Okay, again, based on the place where these indirect expenses are happening, we can classify them as factory overheads or production overheads. Then office overheads or admin overheads. Last one, selling and distribution overheads. Whatever we discussed, it is there in the simple diagram. Okay, now direct material cost, direct employee cost or labor cost, direct expense cost. These 3 things put together only we return, that is called prime cost. Okay. After finding out the prime cost, we have to add factory overheads. Take one format sheet, one statement. I'll tell you, cost sheet, heading. Cost sheet is the heading. All of you take a cost sheet, the heading. Okay. Take 3 columns. Particulars, amount per unit. What you are doing now? format of cost sheet. First column is particulars column. Second column is amount column. Third column is per unit column. What is per unit column? Amount column divided by number of units what you are producing. Okay. Heading may be cost sheet for 10,000 units. Something like that. Depending upon the case. For how many units you are preparing a cost sheet. If it is 10,000 units, total cost divided by 10,000 units is equal to per unit cost. Okay. The breakup you can have individual level also. Suppose material 2 lakh rupees. You are producing 10,000 units. 2 lakh divided by 10,000 is equal to material cost per unit. In the per unit column, we can write. Okay. Now we are going to just take a format. Okay. So first one, direct material in particulars column, direct material underline. Direct material underline. How do you find out the direct material? Opening stock of raw material plus net purchase of raw material minus closing stock of raw material. Write down one by one. Underline the direct material consumed. Under that, you write it like this. Opening stock of raw material. Next line plus net purchase of raw material minus closing stock of raw material. Okay, these three things you have to take, and then you have to write the net amount in the amount column minus closing stock of raw material. No, minus closing stock of raw material. Opening stock plus purchase minus closing stock of raw material. That will be giving you some amount. That amount is called as what? Direct material consumed. Direct material consumed. Suppose that comes as 1 lakh. Divide that 1 lakh by to find out the per unit column. Okay, leave it now. Next one. Next one is labor cost. Direct labor. Next one, yeah, below that. Direct labor. Direct labor. Direct labor. No need. Direct labor will be directly given. You can just write it. Okay. Direct labor. Direct labor. Okay. Next one, direct expenses. A particulars column, you write. 1 second. Give me. Don't get in exam. How you should not write. Okay, you are having a 4-bedroom house. Guests has come, 10 members. You can allot them 2.5 in one room. Okay, not possible. Okay, 3 in one room, 2 in another room, another 2 maybe. But what you are doing? All the 10 members go to this room and sleep. Look at this. Where is that man? Yeah, it is here. All 10 members are here. Hey, please use it. No, it's amount. Your engineer? That engineer problem. Okay, because this one will do very often in BCom, so we'll come to know. Sir, you told 3 columns, I've taken 3 columns. Computer, if you go to our project report, now our students will come with a table before ChatGPT. Okay, they'll come with a table. All the 3 columns will be equally divided. First one will do that by default. Then later, what should we do? Serial number. For serial number, you'll have half acre. For particulars, you'll have another half acre. Particulars need 1 acre, no? Particulars. His name itself, what you will do? You will just write Ram Krishna. It's not Ramakrishna. For serial number 1, 2, 3, there is so much space will be empty. Please don't do that in exam. Now also you practice. It's simple logic, right? You're writing so much thing. Amount is maximum. How much amount you can write? 6 digit, you can keep it. Okay, so please allot the column accordingly. Since you don't know, you are writing like that. Become students may be knowing it before. Okay. I'm sorry, I'm not able to show you that. Amount, particulars, then direct material, direct labor, and then direct expense. These 3 things put together, call it as prime cost. Next line, in capital letter, you write it prime cost.
So can you repeat this? Direct expenses?
Direct material, then direct labor, then direct expenses. 3 things put together, we call it as prime cost. Addition, 20,000, 30,000, 40,000 put together, prime cost. Next, plus. Statement continues. Okay, there is no close. Statement continues. Prime cost plus factory overheads. Yeah, just next line. Factory overheads. It's a statement going on. Continuation. Factory overheads. Okay, underline. There may be so many items depending upon the question, depending upon the company's expenditure, we have to write it. For example, write 2 items now. Factory overheads. Point number A. Point number A. Factory manager salary. Factory manager salary. Factory depreciation. Factory depreciation. Yeah, point number B. Factory depreciation. Clear? Like this, there may be a number of items. I already given you the basic logic, that is any expenditure, any cost or any material or any expenses that is happening in factory production related activities, but that are indirect in nature, should be called as factory overheads. Example, factory manager salary, factory lighting, factory depreciation, factory foreman salary. Okay. Anything and everything indirect nature relating to manufacturing, production or factory should come under this category, one by one. Okay. Next, if you add this, okay, sorry, one more, next item, plus opening stock of work in progress, plus opening stock of work in progress, opening stock of work in progress. Yes. Opening stock of work in progress minus closing stock of work in progress. Minus closing stock of work in progress. Now you have one item called frame cost, one value called frame cost. After that, we have some more numbers, right? Some individual item of factory cost, as well as some opening and closing of work in progress. Now you do all these things and you'll bring to the outer column. Already there is a frame cost. Now frame cost is 30,000. This total is 20,000, means 30 plus 20 is equal to 50,000. What is that called? Factory cost. That's called factory cost. Next line, factory cost. Yeah, next line, factory cost. Okay. Factory cost. Factory cost in capital letter, or you can write bold it. Okay, factory cost. Right. So what is factory cost now? Prime cost plus factory overheads plus or minus opening and closing stock of work in progress. Clear? Next line, plus. Now your products are there in the factory that need to be sold or that need to be marketed, that need to be informed to the customer. Somebody is there to administer it now. That is called office and admin overheads, plus office and admin overheads. Plus office and admin overheads. Underline. Office and admin overheads, underline. Example, point number A. Office manager salary. Depreciation on office furniture. B. Depreciation on office furniture. Likewise, there are a number of items. We don't want to write all those things now. You just understand the logic. Any indirect material or any indirect labor or any indirect expenses that relate to managing the business, administering the business, office in the business is coming under. Okay, next line. That is equal to, now you have cost of, you have factory cost and some item coming from here. If you add this with the factory cost, it is called cost of production. Cost of production. Cost of production is nothing but factory cost plus overheads. That's all. Factory, production cost. Next, plus opening stock of finished goods. Opening stock of finished goods minus closing stock of finished goods. Suppose last year we had some item unsold and this year is expecting some item cannot be sold. That is closing stock. Okay, closing stock of finished goods, opening stock of finished goods. If you adjust this with cost of production, you will get cost of goods sold. You are remembering your BCom now. Cost of goods sold. Cost of goods sold. Okay. Next line, plus the last one. What is that? Overheads. Plus selling and distribution overheads. Selling and distribution overheads. Okay. Underline. Underline Point number A. After the cost of goods sold plus selling and distribution overheads. Underline. Some example, you can write 2 examples. One is sales manager commission or sales manager salary. Sales manager's salary. Delivery van expenses. Delivery van expenses. There will be so many. Only thing is you have to identify which expenditure will go to under which category. That's all. Of course, advertising, bad debt, transportation cost. Yeah, bad debt means what? Anybody? The money which are not recovered from the customer to whom we already sold goods on credit basis. Okay, clear? Now, next one. If you add this with the, if you add the selling and distribution overheads with cost of goods sold, you will get cost of sales. Cost of sales or total cost. Cost of sales, otherwise called total cost. Total cost or cost of sales. Plus the last one. What is plus? You will add with the expenditure in sales only. Illogical answer, no? Yeah, not something, profit, plus profit. You already know what is the cost. You already arrive at a cost. Suppose that 3 lakh rupees is my total cost, sir. My company wants 1 lakh rupees as profit. I can sell it for 4 lakh rupees. So cost of sales or total cost plus expected profit or just profit. Profit. If the cost sheet is expected, I mean estimated cost sheet, the profit is an estimated profit. If it's a real cost sheet, normal profit. Okay, real profit. Profit plus profit. We add the profit with cost of sales. Sales. Cost one is sales. Cost one is sales. If you are asked to find out the per unit value, don't find out all the stages per unit. There are some important stages we written now. Prime cost, factory cost, cost of production, cost of goods sold, cost of sales, sales, profit. In these stages, compulsorily you have to find out the per unit cost, per unit value. Remaining places, if you are not doing also, okay. These are important stage. If you add all the cost, of course, you are going to get the total cost. But mark is given for individual breakup. Stage by stage. Prime cost 80 means 80 should be there. If you add all the values, of course, you are going to get the last value called total cost, irrespective of whatever it is. If I have given you only cost, sometime what happened? Some items which is not appearing in cost, it also will appear in the question paper. Example, dividend paid. What is dividend paid? Share of profit. It is not a cost. It should not come under cost sheet. Interest paid should not come under cost sheet. Income tax paid should not come under cost sheet. All these things are not cost. Not to confuse or simply not to give it. In reality, it is there in a company. In company's records, income tax paid will also be there. Why? I am not telling you GST or something. No, I am telling tax. For you, tax may be GST. For me, tax is income tax. You are confusing, you know, indirect tax and direct tax are confusing. So GST I am paying. Okay. Will I not be asked to pay my income tax? I am. Not even I am asked. I am given with the money after deducting my tax. GST is something different from income. What I'm talking about is income tax. Company, once again, company is earning some profit. On that, you have to pay income tax. That tax is not a cost of product. That you earn something, you're paying. That also you're collecting from customer, means then there's no logic. Okay. But GST, what you're paying, and what input tax credit, what you're getting back, the net will be there in the material cost. Material cost will include your GST. I'm not talking about GST. GST is nothing separately. Cost of material, I told you, one notebook, 100 pages, 10 rupees. The 10 rupees includes whatever you paid is called 10 rupee. In the bill, 8 rupee may be cost of paper, 2 rupee may be GST. For you, it is 10 rupee. That's it. But later on, you're going to take back some amount from your customer. Input tax credit from your customer. You are collecting money from your customer and you are paying to the government of India on behalf of your customer. How much you paid to your supplier, how much you collected from your customer, the net effect you are going to pay to the government of India through your e-wallet account. Okay, so that is automatically taken care in the material consumed. That is okay. Other cost, I mean other tax. Tax I refer to income tax, corporate tax. Corporate tax how much? 30% to 33% here in India? 30 percentage. How much? 20. For some other company, maybe 20. But in general, it is 30 to 33% is there. Okay. So that only I'm talking about. That should not be taken into consideration for cost sheet. Interest paid, dividend paid, any other amount, any finance cost, donation paid, not be taken into cost sheet. Anything irrelevant to the production of any product or service should not be taken into consideration. So these are called cost sheet. One question is coming under this one. Some values will be given. You have to appropriately take the values and you have to feed in the format and you have to find out the final cost. Suppose, yeah, you have to avoid taking the irrelevant items. Suppose profit I will not be giving means profit. Sales will be there. Cost is there, sales is there. Difference between these two is profit. Suppose sales is not there. Profit will be there. You have to add the profit to the cost. You have to find out the sales. Suppose I'm giving you like this. The company is expecting 20% of profit on the cost, on the total cost. How do you calculate the profit now? That's it, simple, over. But sometime the company is expecting 20% profit on its selling price. On its selling price. How do you calculate now? Sales is cost plus profit, agreed. Suppose your total cost is 1 lakh. Total cost is 1 lakh. First scenario, profit is expected 20% on cost. Simple, 20 by 100 into 1 lakh, 20,000 is the profit. Selling price is going to be 120. Simple, no problem. Instead of giving like that, same example, total cost is 1 lakh. 1 lakh. Company is expecting 20% of profit on sales. Cost. What is the cost of production now? Cost of total cost? 1 lakh. How much profit I'm expecting? On selling price. If selling price is 100, my profit is 20. 20% on sales. Percentage on sales means what? If percentage is equal to 100, that is sales. 20 rupees is profit. If 20 is profit, 100 is sales, means what's the cost? What is the cost? Simple logic. But don't confuse much. Don't think too much. Yes, sir. 80. How, sir? It's very simple mathematics now. Subtraction. 100 minus 20. 100 rupees is my selling price. I'm expecting 20 rupees profit in that. 20 is profit. Out of 100, 20 is profit, means remaining is cost. Remaining is total cost. 80 rupees the cost. Now I know what is my cost. What is my cost? 1 lakh. So 20 by 80 into 1 lakh. 20 by 80 into 1 lakh. Why? 80 is equal to 1 lakh. 80 is the cost. Lakh is the cost. 20% on sales is equal to 20 rupees on cost of 80 rupees. Profit. Profit is equal to 20% on sales means 20 out of 80 is the cost. 20 rupees profit. Profit is the same. 20 rupees of profit. Sales is 100 rupee. Cost is 80. If cost is 80, again my profit is 20 only. Then only my sales will be 100. So how will you calculate? 20 by 80 into total cost. Total cost, what is there in the question? So what you do, if profit is given on sales, you have to minus that percentage from 100. How much percent is given? That upon what you are getting as subtracted one, 80 in our example. Suppose 30% is the profit on sales. Then how do you calculate? 30 by 70 into total cost will give you the profit. In first example, 80 by 100 into, sorry, 20 by 80 into 1 lakh, how much? 20 by 80 into 1 lakh, how much? 1/4 of 1 lakh is 25,000. What was our total cost? 1 lakh. 1 lakh plus 25 is equal to, sorry, 1 lakh is our total cost. 1 lakh plus our profit is 25. 1 lakh 25. Now find out the profit percentage. How much the profit now we got? Are you getting confused? 1 lakh is the total cost. 80 rupees if it is cost, 20 rupees of profit. So how much profit is equal to? 80, yeah, 20 by 80 into 1 lakh. How much? That is what, nothing but profit. That profit is added with total cost. Sales will become 1 lakh 25. Now what's the percentage of profit on sales? 25 divided by 125 into 100 is equal to 20%. If you have a doubt, you can clarify like this. Otherwise, just minus the percentage from 100, how much you are getting, that you consider. 20 by 80, 30 by 80, 25 by 75, 30 by 70. If it is on sales, you don't know sales, no? Only you know cost. It's not a accounting, it's a mathematics. Simple, basic mathematics. So this is what we call it as cost sheet. I'll explain once again which item will not come under cost sheet. Donation, interest paid, dividend paid, income tax paid. Okay. What else? Income tax paid, donation paid, I told you, donation. Bad debt will come. Bad debt will come under selling and distribution overheads. Yeah. Listen. Well, the specific one. Do it. If you do it audit, what's the problem for us? We don't have any problem. No. He's doing audit. Why should we include? If you're paying only, tell us. Payment made to auditor. Come under office and administration overhead. Simple. Director fee. Where it will come? Office and suppose simply director fee. Office and director marketing, sales and distribution. Director administration. Production director. There may be a director for in charge of production. Purchase in charge. A director is there who is in charge of purchase. Where it will come? Huh? That much minute we cannot take. There is director, he is in charge of purchase. So it will go to factory overheads. Simply director remuneration. Office and admin overheads. For that only a discussion so far. No? Simply means office. Is there any prefix is there? Which place is in charge? That place. Okay. So getting my point. One is auditing, another one he told. That any is very vague, no? You will tell what is that any? If simply insurance, vague information, right? Simply information, sorry, insurance, office, that's all. We assume it is office. If there is any specification, insurance on delivery van, factory overheads, insurance on office furniture, office overheads, insurance on production manager. Not come. Why? Production manager is there, he is important person, you take an insurance on his life. It will come under factory overheads. Correct. Employees insurance can be taken by company. No. You are manufacturing product. Yeah. Without a man, Without a man, how will you manufacture a product? For that also we have to insure, no? For that also you have to insure. Right. You change your technology, whatever it is, our commerce remains the same. Insurance, you cannot eradicate. There are certain things, not certain things, there are 90% things are there that you cannot eradicate.
Labor costs, the labor insurance costs, and their cost. That's salary.
Huh?
Insurance costs projected in the salary.
What insurance it is? Group insurance on labors. Group insurance on labor. Factory overheads. Office overheads. Okay. Suppose insurance for one person is this much, you are able to identify, then it becomes a direct cost. It will be added in which one? Labor cost. See, anything that can be easily traced to the output is called direct. If it is not able to be traced out for individual unit, that is called indirect. Okay. Is it clear? Cost sheet. Any doubt in cost sheet? What's the time now? We have time to break, or we have to continue and we can finish it. No time to break. That's what exact time. 3:10. So then come after the break. 10 minutes. One more small concept is there. We finish it. Then some more tips. Then we can close it. Friends, those who are online, we are breaking for 10 minutes. Then we can join.
Okay, sir.
Hi, can somebody please close that PDF pop-up message?
to come. Yeah. It is just kept in the footer. For emergency purpose, we'll use this. My kids, one is in 10th standard this year. Second one is in 7th standard this year. Huh? Cannot teach now. How they listen to you? Teachers means my elder son will say, keep all those lecturing in college. Like that he'll tell. Yeah. Okay, anybody is expected till? Check your neighboring place. Yeah, your neighbor has to come. Where is he? He came along with me. Okay, those who are online, can you hear me?
Yes, sir.
Yes, sir.
Yeah, thank you.
Sir, yes,
We'll
sir.
resume now. So that is cost sheet. Another one, last one, what we will discuss is break-even point. That is coming under marginal costing, I told you. Cost sheet comes under methods of costing. I told you in cost account, we have two things. One is methods of costing, and one is techniques of costing. Methods are used to find out the cost of a product. Techniques are used to control over the cost. There are so many methods I told you. One of the method is unit costing method. Cost sheet, what we have done so far, can be used to arrive at the cost of a product only when that industry is that industry is making products for stock. Uniform costing. Uniform costing means what? The products are identical in nature. The products, what you're finding out is identical in nature. That's why you are dividing the total cost by number of units. One unit is not having extra cost than that of the other unit. Equally, you are spending the money. You cannot use this cost sheet. Yes, they'll have different methods of arriving at the cost. That's what I'm telling you, based on the product or service, what you are into, the method of costing will differ. Just to give an example, we have taken this by assuming that the industry is in uniform costing industry. Suppose Toyota is there or Tata is there. For a particular product, this sheet can be used. Tata Nexon. For that, this can be used. Tata Nexon, what you are buying and what others are buying are identical in nature in the same variety. Of course, in that also there will be a variant. Model variant will be there. For that one model, this cost sheet for all the products. Suppose in one plant, 1000, that model is produced means, okay, the variant depends. Okay, so that will change. Now, second one is techniques of costing. In techniques of costing, one of the technique is marginal costing. Under marginal costing only break-even point is coming into picture. I'll explain first of all what is marginal costing, then I'll explain you what is break-even point. Okay, so marginal costing is a technique which is used to have some control over the cost or to manage the cost. It is going to be a tool for management to decide whether to produce this product in addition to what we are existingly producing or not. That's what we are going to take a decision now. I'll explain you now. Marginal costing is nothing but a technique which is classifying the entire cost into three categories. Forget about this category. Now, marginal costing is classifying the cost in a different manner. What is that? I'll tell you. Any other possibility of classifying the cost? Any guess? Direct cost, indirect cost. Okay. Admin cost, selling cost, factory cost. We had something like this. Apart from this, the direct, indirect, based on the same thing. Is there any other classification you heard about? Somebody was raising a point in the previous session. If you produce more and more units, the cost of production, somebody told no. Mathematically, 1000 unit is equal to 10,000 means 1000 first unit should cost 10 more rupees. Mathematically okay, but somebody told sir it is not so. Why? Can you think it of? Think it of means don't think too much. Think it in a normal person. Yeah, that's example I told you, but how that works out. Yeah, same thing you are telling what I told, but little more extra. No, same time I'm teaching for that buy also, right? Suppose there is a company, it is giving you the product for 10 rupees. Right? That's a technical term you have to understand. What is it?
There is a fixed cost and variable cost, sir.
Same cost is there for the machine. Now you are adding 10 more, 100 more units. Same cost is going to be there, which is always there. It's already there. What is that cost called?
Fixed cost.
Excellent. Fixed cost. What you're telling is correct, but technically it is called fixed cost. Suppose you have taken this room for rent to run this class. The rent what I'm paying is for 60 students, but admission is happened only 30. Remaining 30 seats are vacant. That's what he's telling, underutilization of capacity. If you reach towards maximum utilization of capacity, your cost per unit comes down. That's simple logic. Same logic is based on this marginal costing. Actually, what is marginal costing? It talks about the additional cost incurred for producing one more additional unit into the existing unit. It is not direct proportion to the existing cost. Why it is so? The entire cost can be classified into three categories: fixed cost, variable cost, semi-variable cost. Fixed cost, variable cost, semi-variable cost. Listen carefully. What is fixed cost? Guess, yeah. Yeah, example, rent is a fixed cost. That could be a better way of studying what is fixed cost. Fixed cost is a cost which remains constant, which remains unchanged, irrespective of the volume of production. That's what important.
For a period of time.
Okay, you want to add that? Yes, yes. Yeah. For a particular period of time. Okay. But that is not a fixed, that's not a concept here. This month rent is 1 lakh rupee. Next year, we are going to increase the rent by 10% in Bangalore. 1 lakh becomes 1,10,000. That is not the thing you are talking about. That is not variable cost. That's not varying. It's changing, but that changes we are not talking about. If you take that, that's inflation. That's for every product, every service, or everything it is there. Okay. But here it is capacity, maximum capacity. Suppose you are getting admission 61 per student. 61st student, you cannot accommodate him in the same room, which is having 60 capacity. You have to take another room. So that's fullest capacity is 100%, that is 60 students. So for that many students or that many product, the cost of that particular nature is remaining constant. So fixed cost in total remains constant irrespective of the volume of production. Okay, then what is variable cost? Variable cost is a cost. In total, it varies. In total, it varies according to the volume of production. It dances according to the volume of production. Volume of production increases, variable cost in total increases. Example, I told you, to produce one notebook, 10 rupees a paper cost. To produce two notebooks, 20 rupees. The paper cost increases with a direct proportion to number of output what you are producing. Okay, so that is called variable cost. So one more understanding, fixed cost in total remains constant, but fixed cost per unit changes. What do you mean by fixed cost per unit changes? This room is taken for a rent by paying 10,000 rupees. Only 10 students are attending the class. Total admission is only 10 students. What is the per student rent? 1,000 rupees. Suppose 20 students are admitted. So fixed cost per unit reduces, varies in general, reduces in particular, with proportion to increase in the volume of production. Number of units if start increasing, the fixed cost per unit reduces. That is the reason why. If you increase the number of units, your total cost reduces, or per unit cost reduces. Yes, total cost also will reduce. Fixed cost in total. Okay, I'm sorry. Per unit varies. The total cost per unit changes. Not even varies, it reduces. In that proportion, it reduces. Come to variable cost. Variable cost per unit remains constant. Variable cost per unit. You are producing 1,000 notebook. What's the total paper cost? In our example, total paper cost. Total paper cost. I'm just telling, no, 1,000 notebooks you are producing, 10,000. Per unit there, 10 rupees. 10,000 by 1,000 equal to 10 rupees per unit. 1 lakh unit you are producing. That time also, to make one notebook, paper cost remains rupees 10. Same. That's why variable cost per unit remains constant. Variable cost in total increases according to volume of production. Production increases, variable cost in total increases. Number of units produced reduces, variable cost in total also reduces. Come to fixed cost. Fixed cost in total remains constant irrespective of the volume of production. But fixed cost per unit reduces when volume of output increases and vice versa. All right. So based on this, we are going to have some kind of application. Okay, we have some applications. One more, the third one you told, no? Semi-variable cost. What is semi-variable cost? Okay. Any other explanation for semi-variability?
Maybe in the beginning it
Okay.
will be fixed, but at some point of time. it will change.
Yeah, after reaching some point of time, it will start varying. Okay. Any cost that remains constant up to certain extent, up to certain volume of production. After reaching that volume of production, it starts increasing based on the number of units produced. It's called semi-variable. Example, those days telephone charges. Those days 300 calls free. You have to pay 300 rupees as rental income. Rental charge to the BSNL. After that, each and every call will be charged at 1 rupee or 75 paisa, something like that. Even today, electricity bill, up to certain extent, minimum charge you have to pay. After that, per unit, some rate of charge is there. So these kind of, you have to call Siddha. No. Why should we? Fellow beings, love of fellow beings, no? Whomever it may be. We should not hate anybody, right? That itself is told by himself only, no? He is telling, we should not hate anybody. But very bad. They did not call local leaders, no? They sent invitation to many states. But our own former CM is here, son of former PM. They did not call, no? That's very bad. They're telling hate politics, we're hating. But they are only practicing the hate politics. Right? He's here now. He's in Bangalore only. Why don't they call him? We don't know called or not coming. But in the press, they are not understanding they called. Mamdaj was called, rejected to come. Okay, and one more chief minister, Odisha, called not to come. They're all having, see, Mamta is having some more calculation. Another fellow from Odisha, Patnaik. We cannot identify positive or negative. Not even semi-variable. Okay. Fourth category. That state or that politics like that. We cannot understand whether it's supporting flower or hand. We don't know. Always some kind of neutral, and based on issue, they just take a call so that they can get really double engine growth is there only. Real. Okay. I think you started something. Come back. Yeah, semi-variable cost is nothing but a cost which is remains constant up to certain extent. After that, it is changing. Right. So okay, with the help of these three things, what are we going to do? Example: electricity bill, and then phone bill. Any other example for semi-variable cost? Any other example, class? Hello, excuse me. Internet data. Can you explain? The gentleman not understand. Electricity, is in the manufacturing process. Data is not used in the manufacturing process. Mobile phone is towards industry only, gentlemen.
Software that two employees cost will to pay now beforehand. So for example, 3 months salary, instead of paying 3 months salary, I go and pay for this particular software.
Okay.
And after 3 months, the cost of the software is recovered, and following month, that is from the 4th month onwards,
We have to pay.
get the return.
I'm not exactly getting that what it is, but the concept is this one only. Maybe you are working in some companies, you can connect some other specific cost to that. But telephone charges, electricity bill are the best example. Fuel charges how? If you are filling 10 liter, they are charging one amount. Out 10 liter, they're charging some more amount. Even if you take 100 liters, also same rate, no, 100 into 110 or something.
But at least when we take the self-driving car,
Okay.
it is one day it will be some charges, and if it is second day it will be increasing, third day it will be.
Minimum you are paying some amount,
Yes,
that is for some number of hours. After that, per hour or per kilometer,
will be
change it. That could be an example.
even rickshaw owners.
Yeah, okay, let us just come back to this application. Okay. You know the logic, you know the concept, then you think which is semi-variable, which is not semi-variable. Okay. Come back to this marginal costing, break even. What is break even point I told you? The point at which there is no profit and there is no loss. No profit, no loss is called as break even point. The sales at which, the number of units at which there is no profit or there is no loss is called as break even point. Somewhere it was there, no? Okay, yes, sir. Leave it. I'll just explain to you. Could not find there. Break even point is a point at which there is no profit or there is no loss. Okay. If that is the case, how do you expand this sentence of no profit, no loss? Total cost will be equal to total revenue, total sales, total cost. What is the total cost now? We have two costs. Though there are three semi-variable, how much is fixed? We'll add it to the fixed cost. How much is variable? We'll add it to the variable only to have only two categories. Okay. So total cost refers to fixed cost plus variable cost. Okay. How do I find out the break even? We can say it in two ways. One is break even sales in terms of number of units. How many units should I sell to reach out my break even, to cover up my all cost? Another one is how much amount I have to make from my sales to reach out my break even. How many units to be sold, number of units to be sold. Another one is how much amount I should earn as a sales revenue that should be equal to my cost, so that I can breaking the even. Right now, yeah, both logic is the same, but expression is different. No, number of units. Suppose I'm telling you 4,000 unit is a break-even point for this company, meaning that company should sell at least 4,000 units. How do I compute the sales volume? 4,000 units multiplied by selling price per unit will be equal to break-even point in value, in rupees, in India in rupees or dollar. Okay, right. So for that we have simple equation. We cannot just go and check it or at what stage it's coming and reaching the sales cost equal. We cannot go and check one by one. Sir, if I sell 1,000 units, what is the profit? If I sell 2,000 units, what's the profit? If we keep on doing this, it's a waste of time. We cannot arrive at easily. So we have some formula, the simple formula. Before that, I'll tell you one more statement, a small statement, marginal cost statement. Write down. Statement of marginal cost. Statement of marginal cost. This technique is bringing one new term into picture. Okay. Actually, you all know sales minus cost is equal to profit. It has two classification of cost, right? So based on that, you're having one more breakup before you reach out profit. So take it amount, particulars amount, very small one, 4 or 5 items. Particulars amount. Sales in particulars column, sales. Suppose you are assuming that you're going to sell some amount. Okay. Minus sales minus variable cost. Next line, next line. The statement. Sales, next line, variable cost. Okay. If you minus variable cost from sales, you are getting some amount. That amount will be yes, it should be equal to fixed cost plus don't write it. Fixed cost plus profit or fixed cost minus loss. Right. That logic. Correct. Depending upon the number. Okay, we'll take number and tell. Suppose your sales is 10 lakh. Your variable cost is 4 lakhs. What is remaining? 6 lakhs. Suppose your fixed cost is 7 lakhs. Loss. Right. Suppose your fixed cost is only 4 lakhs. Profit. In that line. We'll write it, then you can understand. Okay, next line. So if you minus variable cost from sales, you are getting some value. That value is called as contribution. 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 What do you mean by contribution? Contribution is nothing but the excess of sales over variable cost. If you minus variable cost from sales, there is some excess. There is some more amount that contributes to cover up your fixed cost as well as your profit. Okay, next line, minus fixed cost. Sales minus variable cost is equal to contribution, right? Yeah. Next line, minus fixed cost is equal to all the statement. Okay, it's a statement. Is equal to profit or loss. If it is a positive figure, profit. If it is negative figure, that's called loss. Okay. One more minute, we can just understand what it is. Sales volume, rupees, dollar. How much is the sales? Suppose I am selling 10,000 units. 1 unit is sold for 10 rupee. So sales is equal to 1 lakh. To make this 10,000 unit of product, I spent 60,000 rupees as variable cost. So contribution is equal to 40,000 rupees will be the contribution, right? 40,000 will be contribution. Suppose in my business, the fixed cost is 25,000. Profit will be 15,000 rupees. This statement. This is called income statement. This is called income statement. There, marginal costing technique. In cost sheet, we are not doing like this. In cost sheet, we never worry about fixed or variable. We worried about the function, production function, marketing function, and admin function. Based on the function, we classified the cost into factory cost, admin cost, selling cost. Based on all their indirect nature. Direct nature, we took it into prime cost. Okay, but here marginal costing technique is talking about variability. Cost can be classified into so many categories. These categories based on variability of cost. Based on the variability of the cost, we classify the cost into variable, semi-variable, and fixed. Based on that, marginal costing technique is telling us to make a statement of income called income statement. Simple. Sales minus variable cost. Simply variable cost, the heading. Actually, variable cost may be material, labor, expenses. Okay. Similarly, fixed cost. Same. Labor, material, expenses. Okay. Semi-variable should brought under variable part. and fixed should be coming under fixed cost. Now, next, break-even point is equal. The statement is over. The statement is simple. From that, you can understand some equation, right? No, that's all over. Profit or loss, close. Sales minus variable cost equal to contribution. Contribution minus fixed cost equal to either profit or loss. Statement is over. Now, from this statement, there is an equation, right? Write it. Contribution is equal to, next line, contribution is equal to, no, I'll tell you. Come one by one. Contribution is equal to contribution in total is equal to total sales minus total variable cost. Normally you do this mistake in exam. You just take total, sometime you take another time per unit. Very careful. Contribution in total is equal to sales in total minus variable cost in total. Second line, contribution per unit is equal to sales price per unit or selling price per unit minus, you tell me, variable cost per unit. Contribution per unit is equal to selling price per unit minus variable cost per unit. These two things you should be very careful when you are applying the equation in the formula. We are going to apply the equation, the break-even point formula. For that only I am giving this next line. Profit is equal to contribution minus fixed cost. Contribution minus fixed cost. If you want per unit profit, the two variables should be in per unit. If you want to have in total profit, both should be in total. I don't want to write again and again. Okay, next one. Contribution is equal to yes, profit plus fixed cost. Contribution is equal to profit plus fixed cost. Okay, so this equation you can just bring up and down. Yeah, last means you have to. We already discussed now. Yeah, see, contribution is 10,000 means fixed cost is equal to 5,000 means your profit is 5,000. Suppose fixed cost is 11,000 means your loss will be 1,000 rupees. That time contribution is equal to fixed cost plus loss. Okay, 10,000 plus 1,000 is equal to 11,000. Next. So this equation you can derive from that statement, whether down to up or up to down, whatever it is. Okay, this is mathematics. It's not anything accounts. The statement is sales minus contribution, sorry, sales minus variable cost contribution, contribution minus fixed cost equal to profit or loss. If you know that, you can do that anything. Next, break-even point is equal to, very, very important equation. Break-even point in units. Break-even point in units. We are trying to find out how many units the company should sell in order to reach out the zero profit. Okay. Break-even point in units is equal to fixed cost divided by contribution per unit. Fixed cost divided by contribution per unit. Fixed cost is total. Normally fixed cost is always total. Fixed cost in total divided by per unit is very important. You should not divide it by total contribution. You should divide it by per unit contribution. What is per unit contribution? Per unit, that's it. Next, break-even point in value. Suppose you want to know what is the sales amount to be there to reach out the break-even point. Sales value. Okay, break-even point in values is equal to fixed cost in total. Okay, then no. I'll tell you. Fixed cost in total divided by profit volume ratio. Profit volume ratio. What is profit volume ratio? Next line. PV ratio is equal to, sorry, volume. PV ratio, profit volume ratio is equal to profit volume ratio is equal to contribution per unit divided by contribution per unit divided by selling price per unit, contribution per unit divided by selling price per unit. Both, I mean, yeah, multiplied by 100. Whole multiplied by 100, it is going to be in percent, that's all. If you don't multiply also okay, because in the equation you have to substitute by fraction only. The previous equation, break-even point in value is equal to fixed cost divided by PV ratio. In PV ratio, suppose if it is 20%, 0.2 only there. Okay, substitution. Even 20% means 20 by 100 becomes 0.2. Okay. So this is what break-even point. Next one. Next one. Sales to be made. Sales to be made. Sales to be made in order to earn a desired profit. Sales to be made in order to earn a desired profit. In order to earn a desired profit. What is that? No company is willing to earn only zero profit or zero loss. Before starting any business or before introducing any product, I want to know what is my break-even point. That's it. But after knowing about break-even point, I want to fix how many units I have to sell in order to earn my required amount of profit. My investor is expecting 20% on their investment as return. How much is that return? So 20 lakhs. If I want 20 lakhs as profit, how many units should I sell to reach out 20 lakhs as my profit? That's what this formula is. Sales to be made in order to earn a given amount of profit or needed amount of profit, desired amount of profit. Anyone can, mathematician, derive the formula? Now everything is there with you, no? Any mathematician can derive the formula? Logic. Yeah. Huh? Sandhya is deriving the formula only from BCom. They only remember. Logically, they don't go. Correct? I am also BCom. Break-even point plus profit is equal to what is break-even point? You are telling about break-even point in value plus that will not be logical. Suppose my break-even point is 10 lakh rupees of sales plus my desired amount of profit is 20 lakhs. If I make 30 lakh rupees of sales, then where will you cover up the variable cost? You are telling that this is your break-even sales, 10 lakhs. How much you want for the 20 lakhs? Add it. The 20 lakhs is sales only, no? From that sales, we have to minus the cost, no? Fixed cost remain constant, it won't increase. At least to make the profit of 2 lakh rupee, I should sell more amount. Then only I can reach out 2 lakh rupees profit after facing, after meeting out my variable cost. Okay, any other logic? Simple logic. Okay, write it down. Fixed cost plus fixed cost plus fixed cost. Fixed cost I have to cover up. Confirm. Without covering fixed cost, I cannot reach out the break-even point. Fixed cost covered. Plus how much I want. How much ever you want, that you are trying. Desired profit. Fixed cost plus desired profit divided by PV ratio or contribution per unit. Fixed cost plus expected profit. No. Expected profit. Yeah, desired profit. Divided by. I'll tell you. Right? Don't confuse. Please write down. Fixed cost plus desired profit. How much ever you want profit. In amount only. No, profit is always in amount only. No. Okay, divided by PV ratio will give you the sales to be made to earn that amount of profit in terms of units or in terms of value. If you divide it by break-even, divide it by contribution per unit, you will get the sales unit. Next line. I'll tell you, there is already considered. I'll tell you how it is. Fixed cost plus desired profit divided by that you already taken. I'm telling another one. Contribution per unit. Keep the numerator same. Change the denominator. Instead of PV ratio, you take contribution per unit plus desired profit divided by PV ratio, one formula over. That is going to give you in value, in amount. If you want it in, not per unit, if you want it in units, number of units, how many units you should sell to earn the given amount of profit is equal to fixed cost plus desired profit, whole thing divided by contribution per unit. Contribution per unit. Per unit. That will give you number of units that require to be sold to earn that amount of profit. Sir, I don't want to apply this equation. I already have the first one answer. What is the first one? In amount. You already have in amount. Divided by selling price per unit. The number of units. Write down. Or. The last formula is not required means you can apply another formula. Okay. What is that?
Cost plus desired profit divided by PV ratio. Whole
No,
divided by
what is it called? Sales to be made in sales to be made. Yeah, sales to be made within bracket in value. Sales to be made, no, not there. Write it here, separate in value divided by selling price per unit. Sales to be made in value divided by selling price per unit. What is that sales to be made in value? That is what found out in the previous to previous formula. Suppose you found out the the total sales. I'll tell you, sales to be made in value divided by selling price per unit. What does it give you? It give you the selling price. Sorry, it will give you the in amount. Okay. Yes. Okay. So if you take one or two questions, you will be in a position to better do it. What's the time now? We can have another 5 minutes. Oh, we have sufficient time. 20, 30%. Okay. Yeah, I'll tell you. That's for that only I want to take a number and tell you so that you can understand. Listen here. His concern is, sir, how did we do that variable cost covering? Because without covering cost, I cannot get the profit, right? We can take some number and we can do it now. Take it. Selling price per unit. Selling price per unit is 6 rupees. Sorry, 10 rupees. Selling price per unit is 10 rupee. 10 rupees. Variable cost 60% of sales. Variable cost 60% of sales. Variable cost 60% of sales. There are so many variable costs. You already know what's the cost. Material cost, labor cost, expense cost, everything is there. Put together is, if I want to make 1 unit of product here, 60% of my sales, what I'm planning to sell, will be my variable cost. Okay, next line. Fixed cost is equal to, fixed cost is equal to, fixed cost is equal to 10,000. Fixed cost is equal to 10,000. Fixed cost is equal to 10,000. Calculate profit. Calculate profit. Calculate profit. If 10,000 units are produced and sold. If 10,000 units are produced and sold under marginal costing. If 10,000 units are produced and sold under marginal costing. Can you make that statement now? Can you prepare that statement? We have taken a statement without number, right? Can you take that statement with the number now for this company? Income statement under marginal costing. Particulars amount. How much will be the sales now? Total sales. Sales in total. We have to calculate profit, no? This question is telling you 1 unit is sold for how much? 10 rupees. to make that 1 unit, 60% of sales is called variable cost. That means 6 rupees is variable cost. The total fixed cost in the company is how much? 10,000. If that is the case, if the company produces and sells 10,000 units, what will be the profit? What will be the profit under marginal costing technique? Meaning you have to prepare in that format only. If I do not give that marginal costing technique, you will just take the total cost and minus the, sales, then minus the total cost, you'll get the profit. I don't want that. I want a breakup of contribution. That's why I'm telling you, prepare under marginal costing. So how do you do it? Selling price, first you have to take how much selling price? What is to be found out? What is to be found out? Profit. Profit in total only should be found out. Profit means in total only. Normally profit means total. If I want to calculate profit per unit, I'll specifically tell what is the profit per unit. Otherwise, profit means in total only. So sales in total is equal to how much? 1 lakh. You understood 1 lakh? How it is 1 lakh? 1 unit can be sold for 10 rupee. I am selling 10,000. 10,000 into 10, 1 lakh sales minus variable cost. 60% of 1 lakh. 60,000. Is it clear? Anybody? Any doubt? 60,000. Next line will be
Sir, sales in total and then.
sales
what
in
we
total
have-
is 1 lakh. No,
Yeah, and then
minus variable cost. Variable cost. I'm telling about the format you have taken. No, so minus variable cost. Variable cost is given in the question. 60% of sales. 100 rupees is the sales, means 60 rupees is the variable cost. In this question, sales is 1 lakh. So variable cost will be 60,000. Correct, madam? One line. Madam, you're understanding?
yes, sir, yes.
Yeah.
Sir.
Next line is contribution. Contribution is equal to 1 lakh minus 60 is equal to 40,000. Next line minus fixed cost is equal to 10,000 given in the question. Profit is equal to 30,000. After sales in total minus contribution. Yeah, then minus variable cost. No, that format you've taken already. Yes, yeah, this one. Yeah,
Minus fixed cost will be
profit.
fixed cost.
Yes, profit.
Profit.
Simple. Listen, all of you. Listen, all of you is asking something. Statement. Ah, sir, tell me. Okay, so it is not a process industry. You only told no. Process industry, it will be like that. It is against that. So it is not a process industry. Okay, in any industry,
We'll take an example. That's what
in any industry, sir, please. Fixed cost should be more than not necessarily to be. Not necessarily to be. That studying about that, you will do it in the next semester. That is called. Subject name is okay. That is called. This concept is called business risk. This concept is called business risk. There is nothing like any standard statement that in this kind of industry, maybe true. Suppose labor intensive industry, fixed cost will be less. Yes, no building. No machinery required, no equipment required, no technology required. Everything is labor intensive. Okay. In some other contrary to that, there is fully technology based industry, full technology. That time, fixed cost will be more. No, fixed cost will be more. So that analysis of that you'll study in the next semester in financial management or corporate finance. That concept is called business risk. So when we are going to invest in a company, total risk we are going to see. Total risk is nothing but the combination of business risk and financial risk. Both these risks you will study in the next semester. Business risk and financial risk. I just give an example since he was raising it. Financial risk is something about the risk relating to the mixture of debt capital and equity capital. Debt and equity mix in ratio analysis, we have taken one concept called solvency ratio. Under solvency ratio, we had a concept called debt to equity ratio. So debt equity ratio is a measure of financial risk. How this company is financially risky. What I mean by financially risky, any company which is having more debt capital into its total capital is called financially risky company. Any company which is new, which is very infant in its stage, just now started. Okay, those companies are not advisable to have more debt capital because debt capital attracts a fixed return, fixed charge. You borrowed 1 crore at the rate of 10% interest. Every year you have to pay 10 lakh rupees as interest, irrespective of your profit or loss. It's a fixed charge, similar to our fixed expense here. Fixed financial charges. Okay, so it is not advisable for a company which is a new company and does not establish its sales, does not establish its customer. There's ups and downs in the sales first 2-3 years. That time, relying upon own capital, relying upon equity capital is advisable because the payment to equity shareholder is optional. Dividend payment to shareholder is highly, 100% optional. Even though you do not have profit, no problem. Nobody is going to ask you any money from you. If you've taken money from a bank, bank will ask you interest. If you're not paying, interest on interest. And then service tax, all other taxes added to, it is accumulating. At any point in time, you have to pay. Though you are not able to pay this year, okay, but next year you have to pay that along with additional interest on interest. Okay, so that is called financial risk. Financial risk. This is called business risk. The relationship between fixed cost and variable cost in the total production cost is called as business risk. So business risk and financial risk put together, we call it as total risk. Okay. In another term, you will study the same concept in your next semester, that is called leverages. Financial leverage and operating leverage. Operating leverage talks about the relationship between the fixed cost and variable cost in total cost. Financial leverage is talking about the relationship between equity capital and debt capital in the total capital. Both put together only is the risk of the company. That is called combined leverage. For any company, if you want to assess the risk of the company, you have to calculate combined leverage. Combined leverage. Okay, we'll stop this discussion. Further, you study from the next class in the corporate finance. Okay. Now come back to this last point, that is variable cost, how it is adjusted here. Now same number, can you calculate break-even point in unit as well as in value? Calculate break-even point in unit first. Break-even point in units for the given data only. The same data, yes. Yeah, same data. For the same data, you calculate break-even point in units. What's the formula? First, write the formula. Break-even point in unit is equal to. Okay, write down the formula, then substitute the values. Fixed cost divided by contribution per unit. Contribution per unit you don't have. You have to calculate. Contribution per unit is equal to selling price per unit minus variable cost per unit. Why K and all? K and all is not required. Of course, that's also okay. Because it is going to be in contribution per unit we need, no, per unit. Already we have per unit values. Selling price per unit is equal to 10. Variable cost per unit is equal to 6. So 10 minus 6 is equal to 4. 4 rupees is the contribution per unit. Substitute that 4 rupee in the formula. 2,500 rupees is the, 2,500 unit is the break-even unit. Next. All of you are okay with 2,500 units? Yeah, next. Now you have to check whether this is correct or not. That's what variable cost. Is it correct? 2,500? Yeah. Now take another statement. We will try whether it is correct or not. No need of proving this in the exam, but now for your understanding, we are doing it. Next. Take 2,500 as a sales. 2,500 unit as a sales. Next one. Next one. To prove this, income statement. Prepare an income statement for 2,500 units. How much should be the profit for 2,500 units? How much should be the profit for 2,500 units? 0. That's why it is that is why it is called break-even point. Now you have to prove that. Try 2,500 into how much? Selling price 10 rupees. So sales will be 25,000 minus variable cost. I'm just trying to tell you how that 2,500 unit is the break-even point. Really, it's not correct or not, you're checking. So what you have to do is you have to prepare an income statement for 2,500 units. Sales will be 25,000. Variable cost will be 15,000 is equal to contribution 10,000 minus fixed cost 10,000. Profit is equal to 0. That's why it is called break-even point in units. Next, break-even point in value. Break-even point in value. Break-even point in value. What's the formula? PV ratio. Fixed cost you already know. It's given. PV ratio to compute. PV ratio is equal to, PV ratio can be otherwise called as contribution ratio. Contribution to sales ratio. So contribution per unit by selling price per unit into 100. So how much it will be PV ratio? It's very mental calculation, right? Yeah, I'm asking you to calculate break-even point in value. Formula is fixed cost by PV ratio. You have to compute PV ratio now. PV ratio is equal to contribution per unit divided by selling price per unit multiplied by 100. 4 rupees exactly. Yeah. No, this is not BEP formula. This is sales required to earn. Yes. Ah. 10,000.
For 40,000.
No, 40,000 is for how many? How much amount? Contribution is per unit. No, contribution per unit is how much? 4 rupee.
4
Yeah.
into
Which one you are calculating?
the first one I just noted down.
Ah.
The cost was 10,000 divided by contribution was 4.
Fixed cost?
Was 10,000.
Yeah. Divided by?
contribution.
Yeah. So fixed cost is how much? 10,000 divided by 4.
40. That is 4.
Yeah. Is equal to?
Equal to what I was not getting.
No, you are not. You are here. You are writing my division. You are writing multiplication. Fixed cost divided by contribution per unit. No, is equal to break even. Right. Break even point. Okay, sir. 1 second. Break even point. Now 10,000 divided by 4 rupees is equal to 2,500.
Okay.
Yes. 25,000 rupees. Right. You just compare that 25,000 rupees. What is the number of units of break even point? What's the selling price? 25,000 is coming. Okay, so in that way you can cross check it also. It's not to be written so much. It's very easy mental calculation. Yeah, break even point in value is equal to volume ratio. Correct. You are right.
This contribution per unit was 4.
Yeah, selling price per unit. Yeah, correct. 40%.
Okay, this is percentage. Okay.
40%, no? Yeah.
So this will be
Percentage, no?
Yes, sir. The second one is fixed cost is 10.
Yeah. Fixed got 10,000 rupees. No. What are you finding out now? Break even point in value. Okay. Fixed cost divided by
It's
PV ratio.
25,000.
PV ratio. 40%.
Correct. sir?
Yeah.
That is
Calculate. This is 0.4. 10,000 by 0.4.
Hmm.
Yes.
25,000.
Right. Once again, last one. Last one. All of you listen. Listen. Last one. Excuse me. Many of you are now only checking. Later you can do. Sir. What was the original profit in this company if the company sells 10,000 units? I will give you another sentence. I take the same data. Suppose this company wants to earn a profit of 1 lakh rupees. Yeah, the company wants to earn 1 lakh rupee as profit. How many units this company should sell? Calculate it. I repeat it again. Same data. The company right now earns a profit of how much? 30,000 rupees the company right now earns. By selling how many units? Clear? Now the company wants to increase its profit to 1 lakh rupee. The company wants 1 lakh rupee as profit. If so, how many units this company should sell? Find out. Find out the number of units to be sold. If the company wants to earn a profit of rupees 1 lakh. That's it, the question. Find out. Who is giving the first, answer very first will get 2 marks extra in your assignment 2. Question only not known. Then you will get -2 mark. I repeat the question again. If the company wants to earn a profit of rupees 1 lakh, how many units this company should sell? 20?
7,500.
How did you calculate? Fixed cost is equal to how much? 10,000 plus 1 lakh.
Fixed.
1 lakh 10,000 divided by 4 is what? Contribution per unit. Yeah. Is equal to 27,500.
Hmm.
Now you find out one income statement for 27,500. Yes. So that you will reach the profit of 1 lakh. Prove it. Show the proof. Yeah. Proof.
What?
Make a statement and show me that profit is 1 lakh. Consider the sales as rupee how much? 500 units. Calculate the profit and show me. So this is how the profit is 1 lakh for these given units. Who is giving first? One among the 3 should be considered. Huh? Not fair? Yeah, okay. I'll give. 1 lakh. You got it? Read it. Sales is equal to into 10. Okay, minus variable cost 60% of 2,75,000 is equal to contribution minus fixed cost equal to profit. But you are not in the 3. So this is how marginal costing is very interesting actually. Now, this how many units? 500. That will come to your sales department. How the companies are fixing the target, Companies are fixing target for the sales department. You have to sell this many units in this month. Why it is so? Because of this only. Yes, sir. Very good. How did you get this 165? How did you get this 165? Where it is written? Thank you. He is reminding so many points for us. In exam, listen, in exam, each and every minute detail should be there. So 2 plus 2 is equal to 4. As a teacher, you should know, yes. But you should show 2 plus 2 is equal to 4 in the answer also. Variable cost is written correct amount. But there is no explanation for that amount. Yeah, that's what I'm telling you. Okay, you have to write in the exam how that amount has come. Now sales 27,500 into 10 rupees. In bracket, it should be there. So that I can understand, you understood the logic, then you arrive at 2,75,000. If you simply write 2,75,000, I may give you 1 or 2 marks less. For that you cannot claim. Okay, so detailed explanation should be there in the exam calculation. Okay. Now you are getting this where the variable cost is taken care. Okay, so this much is the syllabus for us. We have done with in between. In the beginning, we just delayed some discussion because of some questions. But anyhow, we managed to finish it in time. I thought of taking one class extra, but due to some reason, it was not taking place. I was busy last week. Sometimes they told we can take extra, but I was not available that time. All right. Any doubt? No? Yeah. Now, today only I'm saying everybody is working. See? Why I gave you this problem means it is easy to calculate. Other time if I given, then you will tell accounting is tough. Yes, yes. A, B, C. I know your name, no. It is there in the LMS, no. Photo is there in LMS, no. But I look the same person, no problem. Okay, finally, we have come to a last moment of this particular semester, trimester. Okay, exam, mark and everything is there, but prepare well. Mark is just number. Mark is just a number. Okay, you are already there in some kind of employment. So that is going to add something, that's all. It's not everything for you. My request is you have to go through all these concepts. Even though you are not able to prepare anything, no problem. After finishing your exam, if you are not able to prepare anything, no issues. Nobody will tell you anything. But you do not understand what it is, then there is a point of question mark. How did you learn accounts? The overall picture should be known to you. Okay, each and every minute level is not known to you, no problem. Suppose you are seeing a movie. The overall story you should be remembering. Each and every scene wise, if you do not know the story or any dialogues, no problem. Each and every moment dialogues, no issues. But the essence of that movie is what the movie is. Okay, you should not say it's a love story or this is a crime story, not that level of understanding in detail. How it starts, how it goes, and how it ends. That logic you should be remembering. Then it makes some kind of meaning that you've done something. So for that, you have to work. Okay. Somebody is asking, sir, reading from the LMS material is enough. Is enough. If you just want to pass or just have some more amount of profit than your break even, that's okay. But if you want to have some good performance or some kind of distinction or excellence, something for that, you have to read some textbook. And textbook also I uploaded 1 or 2, I think. You can check it. Okay. Except financial statement, for all other concepts, you can refer any textbook for that. Any textbook, not internet, not going to Google and asking something. Okay. That gives you in different perspectives. Sometimes if you ask something, I have given an assignment in my regular class. Okay. Security market regulator. That's the assignment. Security market regulator. This guy advanced in all this Googling. No? He went and asked Google. Google has given a 20 pages or 15 pages report. He come and produced. He submitted. Starting itself is American Security Market Exchange. We have SEBI. That guy has written about SEC. One more guy written about some other country. Okay, then they tell us, sir, we are international students. We are trying to find out international perspective. Keep all those perspective separately. So don't go to Google just like that, open. If you give open question, it will give open answer only. Okay, so don't go for that. You read a textbook. Except the financial statement, read any textbook for all the concepts. For financial statement, preparation of income statement and balance sheet. Only for that, you refer only our form. Because some textbook, they did not update to that latest format. You remember we discussed about Tata Motors balance sheet and Tata Motors income statement. In that format only you have to make balance sheet, and in that format only you have to make profit and loss account. I am just telling you for BCom and BBA students. You may think that you already done your P&L account and you have done your balance sheet. That is not in the format what we discussed. We are discussing about balance sheet of a joint stock company, profit and loss account of a company, listed company, limited liability company. It is not about sole trading organization. T form trading account, The trading account itself is not there with us. Trading account is not there. Don't write any trading account. The profit and loss statement. One after another. There is no debit side, there is no credit side. In balance sheet also, there is no asset side and the liability side. It is one after another, one by one. If you do in T form balance sheet and T form P&L account, I will give you 0 because the system does not take minus. So I cannot give minus, I can give only 0. It's having 0 to 10 or 0 to 15 or 0 to 5. So please don't do that. Many of you have done in the previous years, many of your seniors have done. Mercilessly, I will give 0. Okay. Now only you woke up. You are an engineer, then don't worry about it. This instruction is not for you. This instruction is for so-called BCom and BD. They already had some kind of understanding in accounting. That understanding should be relearned. I mean, unlearned. Then they have to relearn this. That's what I'm telling about. Is that okay? And then again, come to the exam without fail. If you come to the exam without fail, the chances of failing is very, very less. Okay. And write all the questions except the choices. Okay. Write all the questions for 100 marks. Give some space for me to give you marks. Okay. Write all the questions for 100 marks. Write all the questions which you know very much first. The question what you do not know, write it in the back. This way, the hidden agenda also is there. All those last questions I can give you blindly, some 2 or 1 it's there, but it gives some good impression to the teacher. It gives you some good impression. All the question, first 2-3 questions are right. Then I carry that impression to the next question also. Of course, 2 sides of it is there. I can expect the same volume of answer, quality of answer in the next question also. But normally, that gives some good opinion to give more mark. Okay. And then number, please, I'm requesting you. Number of the question, please write that very legibly, clearly in the margin. Suppose margin is there, no? No margin is there. Yeah. So write the question number here in this margin. Okay. Inside the margin. Point number, please write in the running matter outside the margin. But what you do is you do both in the margin or you do both in the running matter. That time it is very much confusing. When you confuse a teacher who is valuing your paper, definitely the teacher will get irritated. People like me, definitely, I openly tell you, I should not do that, but I am doing it for many years. If I get irritated, your mark definitely will go down. Definitely, because it's everybody is human being, right? It gets irritation. I have to check the point number and question number. Somebody will write question number 5. Everything is question number only. Question number 5. Okay, do it, no problem. But in the margin, within the margin, if you write anything, I consider that as a question number. In the running matter side, after the margin, if you write anything, that I consider as a point number. Sometimes you are having a disadvantage. Both you are writing inside the, I mean, outside the margin means 2 question I may consider as a 1 question. You may ask that, sir, can you think 1 question as a 3 question, all the 3 points? I never do that. 1 question, if you have 4 points, I will consider that 1 question only. But sometimes 2 questions you might have written in the question number 2 and 3. I might have thought that this is 2nd point, this is 3rd point for the first question. So 3 questions put together, you're getting only 1 time marks. Okay. In manual calculation, of course, we can come to know that in the tallying of the first pacing sheet. But in valuation, just 0 it. Accept, that's all. Finally, just 1 click, submit, over. It will ask you, are you sure? Never see, submit, sure only. Yeah, because we only give mark, no. Please don't do that. I'm asking you, please don't do that. Write the question number properly in the within the margin. And also question number. Legibly write 7 should look like a 7 only. You may look different in your other card, no problem. But your question number should look as what you are intending to write. 7 means it should be 7 for me also. 9 means it should be looking like 9 to me also. 7 should not be looking like 9, 9, 9, vice versa. Please don't do that. These are all very small things, but when you are writing it, you are focused only maybe in answering the questions. Okay, but that time you should not forget it. This time you have to take care of it. Okay, anything you want to ask? And don't write any extra question more than 100 marks. If you're writing, please write it on heading extra. Then you write it. If first question is wrong, section A, 1, 2, 3 written, first question is wrong, you written extra fourth question in the last. If fourth question is right, okay. If you do not irritate anywhere, then that question gets marks, not full mark. That question gets marks. If it is correct, accordingly to get marks. Okay. If you write 1, 2, 3, 4, 5, writing on the top, choose the best answer. We will choose the first 3 answers. That's all. There is no chance of choosing the best answer, only first answer. These are all the things you have to keep in mind. Of course, examination is not new for you. You are in a post-graduation level now, or somebody might have already done one post-graduation. You may be in second one. So that is easy. These are all the things I want to tell you. Anything you missed out? Yeah. I am also like you. I am afraid of cameras, but I don't know whether it is there or not. In class, I don't like, but nowadays, elaborate answer. How much ever you can elaborate, that much ever you elaborate it. Huh? No. Mark differs. But yeah, thank you for asking that. Suppose in balance sheet, class listen, one important point. That's relative. One question, suppose you are writing in 15 marks, and it is not tallying. 1 second you try, another 2 minutes, another 2 minutes. So you just leave it. Sir, I will definitely tally this. Then only I will leave the hall. If you are doing it also, you can get only 15 marks. Somebody who left it before half an hour and is doing another question, not tallying, he or he may get 13 marks. Only the 2 marks may be a difference. By the time she would have done another question, which is worth of 10 marks, she would have got there 7 marks. So she is the winning person. You are losing. You cannot prove that you know accounting.
Suspense.
We'll talk later. We'll talk later. Okay. So that's it. Thank you so much. All the very best. See you later. Anything is fine. Yeah. Thank you.
Thank you, sir.
Any other point you would like to ask?
No, sir. Thank you, sir.
Thank you, sir.
Anybody unlike people? Are you okay? We can close it.
Thank you.
Yeah, please.
Yes, sir.
Anybody can respond from online. Can we close it, or do you have anything to ask?
Yes, sir.
Yes, sir. Yes, sir.
Yeah.
Can
Sir,
close.
all clear, sir. Thank you, sir.
Feel free to ask in mail or in the call or in the WhatsApp.
Yes, sir. We will send you the message.
Okay.